Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 2nd of December, Wednesday. So as usual, in our market briefing, we will cover three parts, namely the fundamentals, the news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold rebounded by 2.15%. The pair of Euro-US dollar surged by 1.24%. The dollar index plunged by 0.88%, while oil falling further by 1.48%. So let's get into details with our headlines of today. First off, let's discuss on the gold, where we can see the gold is able to catch its breath back above the 1800 levels. Now the yellow metal was able to pare some of its November losses back above the key 1800 levels following the dollar's plunge on Tuesday. Now the Fed's testimony also hinted a possible 900 billion emergency stimulus to aid the US economy, which had further boosted optimism in the market. Now however, until an official confirmation, the safe haven metal is still threatened by the market's positive risk sentiment, and further decline in other safe haven assets can be expected. So instruments involved here, not only gold but also the safe haven yen. So moving on, let's take a look at the dollar, where the bearish pressure on the dollar index resumed quickly after the Fed's testimony, joined with US Treasury Secretary Steve Mnuchin, agreed on a second stimulus amounting to 900 billion on Tuesday. Now Mnuchin said that he would discuss the suggested stimulus with House Speaker Nancy Pelosi, and investors' risk appetite continues to lead them from safe havens into risky assets, now causing yesterday's plunge in the dollar index and a surge in the US stock markets to a historical high. So overall, we can see that market risk sentiment is very positive, causing them to sell off any safe haven if they have any chance. However, for the gold, it was able to climb higher yesterday due to the dollar's fall, which also led to a surge in risky assets such as the pound and the euro. So overall, up ahead, investors will focus on a second testimony later today, and also the release of the ADP non-farm employment change, which is one of the leading indicator for this Friday's non-farm payrolls. And investors will focus on the results of the jobs data to gauge the current US labor market. So instruments involved here would be dollar index itself. And moving on, let's take a look at the news release we have for today. So please take note, times stated here are at GMT plus 8. So the first data, as mentioned, would be the ADP non-farm employment change at 9:15 PM. Where it is expected to increase from previous month of 365,000 to 410,000, indicating a higher employment activity in the private sector. So any reading higher than the forecasted value would be taken as a bullish sentiment for the dollar after falling for the past few weeks, and also would be the second testimony at 11:30, where we might be able to obtain further signals, especially towards yesterday's discussion on the stimulus plan. So we will see whether or not Steve Mnuchin is able to discuss and to agree with Democrats House Speaker Nancy Pelosi on that matter, where the approval of the stimulus would actually provide further negative pressure onto the dollar as it boosts market risk sentiment, and we can once again see a surge in risky assets such as the euro, the pound, and not to mention the US stock market. And at 11:30 would be the crude oil inventories report from the Energy Information Administration. So overall, the US inventories last week is expected to report a drawdown of 2.3 million barrels compared to the previous data of negative 0.75 million. So overall, any reading lower than the forecasted value would indicate that the overall inventories is actually decreasing more than expected, thus signaling a stronger demand and providing support for the oil price. So that is all for the news release. Let's take a look at the technicals. So here's an overview of instruments to be covered. First off, the Euro US dollar H4 showing a uptrend. For the Euro GBP, H4 starting to show an uptrend as well. For the pair of US dollar Swiss franc in the H4 showing a downtrend, whereas for the gold in its H4 still in a downtrend. So let's get into clearer details with the chart analysis, starting with the Euro. So overall, from looking into the daily chart to obtain the next resistance support, we can see that overall the pair is testing towards a support at 1.2060, where a further resistance would be the support and resistance near 1.2180. Now moving back to the H4, we can see that overall the pair has been able to break above its psychological level near 1.2000, and overall, as we speak in terms of fundamentals, is supporting a very strong risk sentiment. Thus, investors are demanding a lot for the risky assets such as the euro and the pound, causing yesterday's surge in the euro back to its one of the highest levels last seen in over here, which is in May 2018. So overall, the pair might face some technical correction, pull back all the way towards the support level at 1.2000. So overall, cautious investors are advised to follow the trend, which is an uptrend, considering long positions after the retracement, possibly near towards 1.20. So any levels above the resistance of 1.2 would be a great entry point for a long positions, where stop loss should be placed all the way towards the lowest level reached near 1.1900. And a take profit can be targeted all the way towards the next resistance zone at 1.2180. So overall, this is a long-term suggestion, so please use proper risk management and a minimum lot size depending on your capital. Moving on, for the Euro GBP, so extending outside, we are able to draw an overall downtrend for the pair, connecting the previous high, and also looking back into the Fibonacci would be the highest point here all the way towards the lowest level, and we can see that the pair is currently testing towards the downward trend line. MACD signaling a bullish momentum suggests the pair to extend higher after successfully breaking above the downward trend line and also the 38.2 Fibonacci near 0.9020. So overall, cautious investors are advised to consider long positions only after the breakout above the 38.2 Fibonacci near 0.9020, with a stop loss around 0.8980 and a take profit all the way towards the 50.0 Fibonacci at 0.9060. Next, for the pair of US dollar Swiss franc and the H4 chart. So overall, constructing a Fibonacci from the previous high over here all the way towards the low, we are able to see that the pair is currently testing towards the lowest level, and almost in the daily chart as well as even in the monthly chart. So overall, we are waiting for the further bearish confirmation, which is the breakout below the 0.0 Fibonacci at 0.8980 to consider a short positions with a stop loss of 40 pips at 0.9020 and a take profit all the way towards the psychological level of 0.8900. However, if the pair fails to break below the 0.0 Fibonacci, aggressive investors are advised to consider short-term long positions with a stop loss and take profit of 30 and 50 pips respectively. Lastly, for gold in the H4 chart, constructing the Fibonacci from the high over here to the low, we can see that the gold is facing some technical correction and rebounding back towards the 23.6 Fibonacci near 1815. MACD signaling a bullish momentum suggests gold to extend higher if it's able to break above the 23.6 with a stop loss of 100 pips at 1805 and a take profit of mostly around 200 pips at 1835. However, if the gold fails to break above, it might continue extending lower following the medium-term downtrend, and aggressive investors can then consider short positions with a stop loss near 1820 and a take profit all the way back towards the psychological level of 1800, or to an even lower target would be back towards all the way the 0.0 Fibonacci at 1770. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.